Julius joins in with his views on how he sees the road ahead for emerging markets and India and specific markets. Great to have you on the show. Is it risk on for EMs? As we collect data, the indications are that, especially with the inflows, and I'm talking about ETF products and otherwise, that money's coming back into emerging markets. Is that the case? And do you think India can get a decent percentage of that that inflow?
It is the case. Emerging markets are up so far this year because I think primarily of the about face that the Federal Reserve made at the beginning of this year. And so emerging markets have a pretty clear inverse correlation with the dollar, which has been on the soft side, but not very, very soft. It's not like the dollar's collapsing by any means. Anyway, yes, India would be a beneficiary simply because in the MSCI Emerging Market Index, India is about 15% of the weight. So purely from a passive benchmarking perspective, it will be a recipient of these flows if they continue.
Mark, you think expensive valuations when it comes to India as opposed to other emerging markets could become a concern eventually?
I very much think so. So what I was talking about before was the passive funds. They will buy something no matter what, simply because they need to achieve a certain benchmark weighting. But for the active funds, you are right. India stands out like a sore thumb because not only is it a big premium to the emerging markets, it's also the only emerging market that is at a premium to its average price-earnings ratio of the past 10 years.
Okay. Mark, do you think that this rally in emerging markets will only be short-lived till one sees a breakthrough, maybe come March, between the US and China trade talks that could perhaps make way for renewed interest in both the regions? I know the US markets have done relatively better than the Chinese markets, but even so, do you think that there could be a change in trend then?
I think that trend change is more likely to come, I would say, in the summer. So I think that the markets will probably have a good first half, including the emerging markets. You rightly point out the trade talks with China and the United States, which I suspect will have some positive resolution in March. But the bigger issue is about intellectual property, cyber espionage, geopolitics, world powers. It's not like the US-China relationship will all of a sudden go back to being the way it was. But anyway, that's US-China. Why did I say the summer? Because I think that what's going on, which is kind of weird, is that the US economy is still printing extremely strong numbers. You might have seen the payroll numbers for January, over 300,000 new jobs created in that month. December, also 300,000 new jobs. The fourth quarter earnings, 70% of them are beating expectations. So the US economy has not slowed down. It's still really booming. And yet the Fed has made this strange about face, I think really because it didn't like the fact the market was collapsing and it was getting blamed for it. But what I mean by all of this is by this summer, I think it will become obvious the Fed will need to continue tightening to respond to the strong economy. And then people might start to worry about the impact of that, and the dollar could continue to rise. But that's still about 5 months away.
Within India then, Mark, the concerns really seems to be that while the broader markets, that's the mid and the small cap indexes, haven't moved much, it is the benchmark Nifty 50 which is really in the lead. And within that as well, it's just a contribution of 10 to 15 stocks at max which have really participated in the Nifty move. Do you sense that at one point we could perhaps see either the underperformers play catch up or some sort of sectoral rotation happen?
I'm not really best placed to answer that question. I apologize. It's a little too precise for me. But clearly, you know, when mid caps lag after a period of time, they'll become inexpensive and they'll catch up. If I was to comment just broadly on the Indian market, what bothers me is I think that the earnings forecasts for this year are still too high. They were too high last year. They were too high the year before last year. And I think they're probably too high this year. People are looking for a big rebound in earnings, particularly in the banking sector. And if it doesn't happen, there's room for disappointment. And just looking back at the history of these things, I suspect that there will be disappointment.
Okay. When you look across the globe, how are you mapping the opportunity in Europe in the wake of the Brexit deal? The market seemed particularly calm, hoping that 11th hour, 59th minute, there would be a deal done. But do you think that's wishful thinking? Because it doesn't seem like much has been, put on the table just as yet in terms of a reworked transaction.
Well, you know, once again, I apologize. It's something that I struggle to say anything meaningful about. Brexit, you can talk about it for hours, but acting on it is tough because the probabilities are impossible to determine, probably quite equally distributed. I mean, the probability between a soft exit or a hard exit or somehow no exit at all. So there's two ways of looking at it. It doesn't make sense for the British to shoot themselves in the foot and have a very messy departure. But then you could say, well, even the Conservative Party is so deeply split, it can't agree on what to do. You could also say it doesn't make sense for the European Union to hurt the British too much because they're a very important economy for Germany, France, etc. But on the other hand, if they let the British leave too easily, other countries that are dying for more stimulus, like Italy, would say, well, you let the British get what they wanted, you have to let us do what we want to do too. So I can't really tell you what's going to happen with Brexit, but I'll just say that what's really more important, actually, or equally important for the European markets, is that the European economies have started to soften quite dramatically again. And of all the regions in the world, the one I think will show the largest decline in GDP growth this year is Europe. I think we're looking for a drop from about 1.5 down to less than 1% GDP growth in Europe this year.
Okay, Mark, we leave it at that. Thanks very much for joining us with your opinion on world markets, emerging markets, and in specific India.
Thank you.